Welcome back to the channel. Today, we're diving into the world of low-cost stocks and how you can make money with them. Now, when I say low-cost, I'm not talking about penny stocks or get-rich-quick schemes. We're talking about solid companies with real potential trading at a price that won't break the bank. Look, I get it. Investing can seem intimidating, especially when you see those crazy stock prices for companies like Apple or Tesla. But the truth is, you don't need a ton of money to start investing and building real wealth. That's what's so awesome about low-cost stocks. They give you the opportunity to get in the game, learn the ropes, and potentially see some serious returns, all without needing to drop tens of thousands of dollars up front. Over the next few minutes, I'm going to break down everything you need to know about finding, researching, and ultimately investing in low-cost stocks. We'll cover how to find these hidden gems, analyze their potential, and build a diversified portfolio that aligns with your financial goals. So buckle up, grab your notepad, and let's get started. Alright, so how do we actually find these low-cost stocks? Well, the first thing you're going to need is a brokerage account. Now, there are a ton of options out there, but personally, I use and recommend M1 Finance, and no, they're not sponsoring this video. M1 makes it super easy to research stocks, build a diversified portfolio, and even automate your investments. Plus, they have some of the lowest fees in the industry, which is crucial when you're trying to maximize your returns. Once you've got your brokerage account set up, it's time to start digging into some research. A great place to begin is by looking at companies and industries you understand. Remember, investing doesn't have to be complicated. If you're passionate about coffee, for example, maybe you start researching some smaller players in the coffee industry. Or, if you're a tech enthusiast, maybe you dive into the world of semiconductor companies. The key here is to find businesses that genuinely interest you because that will make the research process a lot more enjoyable. Now, when you're evaluating a potential investment, you want to look for a few key things. First, check out their financials. Are they profitable? Are their revenues growing? What's their debt situation like? These are all critical questions to ask before you even think about investing in any company. Second, consider their management team. Are they experienced? Do they have a good track record? A strong management team can make all the difference in the world, especially for smaller companies. Finally, think about the overall market opportunity. Does this company have room to grow? Is there a real demand for their products or services? These are all crucial factors to consider before hitting that buy button. Now, before you go all in on any single stock, no matter how promising it may seem, we need to talk about diversification. Diversification is absolutely crucial when it comes to investing, especially with low-cost stocks. Remember, these are often smaller companies, which means they can be more volatile than their larger, more established counterparts. So, how do you diversify your portfolio? Well, the simplest way is to invest in a variety of different stocks across various sectors. Don't just buy 5 different tech stocks or 5 different energy stocks. Instead, spread your investments across different industries like healthcare, consumer goods, real estate, and so on. This way, if one sector of the market takes a hit, your entire portfolio won't be decimated. Another way to diversify is to consider different asset classes altogether. Stocks are great, but it's also a good idea to have some exposure to bonds, real estate, and maybe even some alternative investments like precious metals or cryptocurrencies. The key takeaway here is this: don't put all your eggs in one basket. By diversifying your investments, you're essentially spreading your risk and increasing your chances of long-term success. Chapter 3. Staying ahead of the game, monitoring market trends. Alright, so you found some promising low-cost stocks and diversified your portfolio. Now what? Well, investing isn't a set it and forget it kind of thing. You need to stay informed about what's happening in the market and be prepared to adjust your strategy accordingly. This means keeping up with financial news, reading industry reports, and paying attention to economic indicators. What's happening with interest rates? How's inflation looking? Are there any geopolitical events that could impact the market? These are all things you need to be aware of as an investor. Now, I'm not saying you need to become a financial news junkie and spend hours every day glued to CNBC, but you should aim to stay informed about the factors that could impact your investments. There are tons of great resources out there like the Wall Street Journal, Bloomberg, and even free newsletters like Morning Brew that can help you stay up to date on the latest market trends. Chapter 4. The goal is to achieve your goals, setting realistic expectations. One of the biggest mistakes I see new investors make is going into the market without a clear plan or realistic expectations. They hear stories of people getting rich quick and think they can do the same, but the truth is, investing is a marathon, not a sprint. Before you even think about buying your first stock, you need to sit down and define your financial goals. What are you trying to achieve? Are you saving for retirement, a down payment on a house, your dream car? Once you know what you're working towards, you can start developing an investment strategy that aligns with those goals. This means setting realistic expectations for returns. Don't expect to get rich overnight. Instead, focus on building wealth slowly and steadily over time. Remember, the stock market goes up and down, but over the long term, it has always trended upwards. So be patient, stay disciplined, and don't get discouraged by short-term fluctuations. Chapter 5. Patience is your superpower, staying disciplined in the market. Finally, let's talk about the importance of patience and discipline. This is arguably the most crucial aspect of successful investing, especially when it comes to low-cost stocks. See, when you're investing in smaller companies, there's going to be more volatility, there will be ups and downs, and it's easy to get caught up in the emotional roller coaster of the market. But here's the thing, successful investors don't panic when the market dips. They don't make rash decisions based on fear or greed. Instead, they stick to their investment strategy and ride out the storm. Remember, you're in this for the long haul. The stock market is not a get-rich-quick scheme, it's a vehicle for building wealth over time. So how do you stay disciplined? Well, first, it's crucial to have a plan and stick to it. Don't chase the latest hot stock or try to time the market. Instead, focus on your long-term goals and make investment decisions that align with those goals. Second, don't be afraid to seek out advice from a financial advisor. A good advisor can help you create a personalized investment plan, manage your risk, and stay on track to reach your financial goals. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more tips on investing and personal finance. Remember, investing in low-cost stocks can be a fantastic way to build wealth over time, but it's essential to do your research, diversify your portfolio, and stay disciplined. Don't get discouraged if you don't see massive returns overnight. Building wealth takes time, patience, and a solid strategy. Focus on the long game, make smart investment decisions, and you'll be well on your way to achieving your financial goals. Now, I want to hear from you. What are some low-cost stocks you're currently researching? Let me know in the comments below. And hey, if you're new to the channel, don't forget to subscribe for more videos on investing, personal finance, and building a life you love. See you in the next video.